All righty, welcome back. We'll get started in a couple of minutes. Watching this very closely right here. All right, let's see, get my pointer back, get rid of this. What time do we have? Let's see. Okay, time to get started. Let me put that back up and whoops, wrong one. Okay, you know what? Let's just do this a different way. I'm trouble getting my mouse to cooperate for this, so let's just get rid of all this. Do it again in a second. All right. So this session today is kind of a reschedule of yesterday's. What I wanted to do, I need this over here. Hang on, I minimized something I didn't intend to. That one has to be this one. Right. Okay. Cool. All right. So I put my jigsaw back. I would avoid the new one right now, guys. It couldn't handle the open at all. It just crashed over and over again. Luckily, I was only in a small trade when it happened. I usually don't go straight to betas like that, but there was a couple of features in that one I really wanted to look at. And unfortunately, they're just not baked in and ready for prime time yet. So I would sit tight on that if I were you. I'll try it again after they get through a beta cycle. What I want to talk about today is mid-session. We've had a pretty good push down. Here, let's kind of zoom out and look at all four indexes for some perspective. So let's just make these today. We've had a decent push down, and it was a pretty good short right about when Lee was running in the session. We gap down, we kind of gap and goad. Look at the 15-minute in ES. It was a weak break initially, and then it broke down pretty hard if you were watching that. So where are we now? Well, we got to SD3 on, a decent amount of energy. So this should be a good mid-session. Remember, the objective, this is the redo of yesterday. I want to show you how different mid-session looks. Remember, we talked at the beginning this morning, we were talking in the pre-open session about times of day and how critical that is. And if you weren't there, you need to review that. But real quickly, if you look at my process document, the things that matter for my decision making, I'm a discretionary trader. That means I look at the market and I make decisions based on what I'm seeing. These are the criteria. Number one, always the time of day. Every time of day is different. Quick review again, there's the reopen of the contract after the close, that's 5 o'clock Central. And then around midnight, we get the midnight oil, which is the opening of Europe and stuff like that. Then we go into pre-open, which is earnings and economic announcements. And that's always a tricky time. We did a little live session for that today. Then the open, which is unique. And then after the initial bounce, we go into the midday, the rookie roast, as we called it in the pit. And we're there now. So this should be quite tradable. It usually is. And it's quad witch day, so it may not be, but we'll take a shot at it and compare this to what we see next week when we're totally on the new contract and we're past witching, et cetera. So to do this, it's always best to do it in ES to start. ES has the clearest overall picture. Oh, shoot. Hang on 1 second, guys. I just got to run upstairs. Something just went off up there that I forgot to turn off. I had something cooking, so I don't want to leave that happening. So I'll be right back, and then we will pick up on this topic. Okay, sorry about that. I am back. So if you come in any mid-session of regular trading hours, that's when this is the easiest to do. The overnight, it can be easy, but it can also be tricky overnight because remember what I said in the beginning this morning, that overnight is pure speculation. You don't have the equities trading. So the margin for error is smaller because if something suddenly happens, it comes all at once with kind of no warning. On the other hand, mid-session, you get a really good idea of what's going on just by looking at the volume. So let's do that. I was drawing on this earlier, but here's the open right here. Let's say you were just watching this off the open. Could this keep you on the right side of the correct side of the market? And my answer is yes, it could, because it's a real quick, good summary of what's going on the tape. And if you learn to use it that way, it's very powerful. So here's our open. And again, this isn't time-based, it's just the 15-second bars, so I don't have any of the other artifacts on here as to, 15-minute or whatever. I'm just looking at the volume. So look at the open. We pushed down 27 ticks on 18K. We pushed up 37 ticks on 23K. That's a wash. Nobody's winning that battle. And you can see we went into ebb and flow right before the open. So then what happened? Well, we had a push down on 28K, almost the same amount of volume. And that only got 40 ticks, 37 ticks, 40 ticks, same thing. Then we had a weak bounce. Again, the volume split, but it didn't really go anywhere. Half the distance on half the volume. Then we come down on half the volume again. See, look, 13 to 6 and about the same number of ticks. So this is going into ebb and flow again. We had a little bit of price discovery here, and now we're kind of agreeing on value. So this is a very important spot. Look at what happened right here. So this is really important to be able to draw. Again, if you learn to read this stuff and then trade it on the dome, it'll keep you on the right side of the market, the correct side of the market. So that's why I'm showing you this. Let me grab a different color. Okay, so this was the spot that the buyers stepped up at the open, and the sellers weren't uniform as to where they were. It was just kind of finding ground up there. But this was a pretty clear spot. There were buyers right up until here. Look what happened. Look at that wick right there. And then look at this downside volume. So again, if you're just watching this and nothing else, the second that happened, you could have joined it for a short. You might have missed it, but then your reshort was really clear. We came down on 45K of volume for 55 ticks. We bounced on only 15K, 26 ticks. Even if you add all three of these together, it doesn't even make half of that, and that's the point. So it made a lower low. You could expect to see a reassertion of that. And then what does this look like? You always want to compare the turn. And be mindful, again, I've said this in a couple of sessions, you should understand this by now, but be mindful of the fact that all time frames are going to look slightly different. So in general, you want to do this on one time frame that's relatively fast. I find 15 seconds to be ideal because it's really clear. So again, this low took out this low. The volume diminished and it didn't go as many ticks. So that's the end of your short. Your short was either from here or here to here. And note what Jigsaw did right there when this line went blue, that dark line, the thicker one. What that's doing, I've talked about this a little bit, that's putting on a volume-weighted move against the direction. And so at that point, it turned. And you know what? My other indicator isn't on here. I reloaded my Jigsaw, and for some reason, that one didn't come. So let me throw the other indicator on here too, which is Super Trend. And and I just use the defaults on these things. It's not that specific. Where the heck is Super Trend? Come on, it should be alphabetical. There it is. Okay. So the Super Trend is the one that shows the change based purely on the price. And then this thicker line, which I also had even thicker. So let me do that also so that it's easier to see. Line width 3. Let's make that line width 4. Okay, then it will be more obvious. Yeah, now you can see my thick line. So get rid of the drawing stuff. And there we go. All right, so This was clearly the end of the short. See, look at the wicks down here. Again, when you get multiple wicks on a corner, that's a turn or at least an attempt at one. Like this was an attempt to bounce that got sold. This was an attempt to go lower that got bought. And the price turned right here. So again, the blue thick one is gaming the price based on the energy of the volume. And that's why it was red on these thrusts down and it turned blue. And then the price actually flipped over just purely on a trend following of the price using a very fast trend, obviously. The super trend uses a Hull moving average, which is about as fast a moving average as you can get. So it's really clear what's going on here if you just watch that. So where are we right now? Let's look here. We just had another real strong push down. So again, that was an attempt right there to test that low. Down on 19, up at 6. This should have been an automatic short if you're watching this, because the odds that's not going to at least take this low out are overwhelmingly good. So, and it not only took it out, it went quite a bit farther, then it bounced. So again, quick short. You could have reshorted again here. And then down here, that's where it ended because you can see lots of wicks and the volume rolled over. It was still, from a volume weighted perspective, a short here until we did this ebb and flow here. And that's why that line turned blue. And now we're going up on blue. In other words, the volume's on the strong side, on the buy side. So this is a really good way of understanding if you're on the right side or the wrong side of the market at any given instant. So that's why I like to have it kind of next to my dome. So I can watch the trading on the dome. Let's reset all the domes right now. And we're right on a high volume node, right above the VWAP. So this could be an interesting place for a short. Let's see if the volume wanes off at all here. If it is, we might want to play short here. The tick's a little too strong for that. 600's a very strong tick, but 55's in play here, I think. Let's try it. So there's 55 short. Now, again, if this is going to work, you can always get 3-4 ticks if you've got a good entry in ES. So here we go. Let's do that on these and see what we can get. Again, I'm just showing an example. I'm not trying to make a lot of money, but look, we found an inflection point. It just percolated up and got sold again. So watch this spot. This could be a turn or continue up strong. I'm going to try to fade it just because that feels like the right thing right now. And let's see if we can take profits on that fade. Even if it just pulls back to the last significant move up, which was right here, that's 54. That'll give me an exit profitably. See? So again, I'm doing this in micros just to show it to you, but you could be doing this in minis. And it'll obviously pay a lot more. In fact, just for fun now, let's put this back to the mini and we'll do that. It's mid-session and I'm happy to trade mid-session with minis because it's quieter. And that's, again, if you find a quiet time where you can play really tight for ticks with size, this is how you can make the most money as a trader in futures. This is the most predictable set of conditions when we have this right here. So again, let's try a 55 fade. If it gets too much above this, it's 57's the next inflection point up here, the next quarter number. But let's just see if we can scalp for ticks here. There's one. Okay, again, I'm just going to try to get, there it is. I'm just trying to get 2 or 3 ticks on each one. And 3 ticks is $37.50 before commissions. You pay the $4 commission. That's a really nice scalp when you're in the trade. It didn't even measure time that I was in that trade. My little jigsaw says time in the trade. It says 00. So it wasn't even a full second. And this is where the wave volume is really useful. And you want to learn how to read the footprint on the dome, but this helps you kind of learn how to do it. That's the beauty of it. Look, let's go back and look at this. Look what happened here. That's the spot I told you we reversed. We went into ebb and flow, weak pullback, didn't get all the way back here, not much volume, less volume than the moves up. So we reasserted the move up. We took that out. There's a spring right there, beautiful spring right there from 42 all the way up to 49. Again, a low volume weak pullback, which got us up here where it ran out of gas, and that's where I was shorting it at 55. So if you just watch this, guys, it will get you in the right frame of mind for what to trade on the dome. And so it's a really powerful combination to have these right next to each other. You can see this is just the spot right up here where I was just fading it, right on that high volume node. Now we had a weak pullback. So this actually could be a long down here. If that tick goes back strong, it might be right here on like, say, 50. Let's watch that, maybe 50 3/4. Yeah. I didn't get filled, but it's already squirting back up. Now we're at 54. So you see what I mean? You can watch this short-term absorption. You can see it on the dome. I can see it right there. There's a price rejector right there, but this makes it really visual which side's currently in charge. And this was clearly still a long, but that doesn't mean you stay long. You can scalp in and out of these if you're nimble. And it's noteworthy, this area of congestion that we're in right now is exactly the previous ebb and flow area. See back here? So again, if you just look at the visual patterns here and you know nothing else than the volume and how far it's getting, how many ticks, this is almost a tradable edge. Now, I say almost a tradable edge the way that I'm saying it because what you see when you're looking at wave volume is a summary of the order flow. If I was watching a really fast footprint, like right now, this is a 30-minute footprint. Let's make this a 5-minute footprint. We would see the same behavior probably, but it's a lot harder to learn how to read. Like, well, I can't read that low right there. There's actually UB down there in a price rejector where I was shorting it. So that's confirming my short at 55. So that and that go together. But it's still kind of hard to read that versus just watching this. I mean, I've been trading a long time. I've looked at a lot of footprints. I understand the value of them. But I'll tell you what, here, we'll get another 3 ticks here. Wave volume, I've never stopped using it, and I've been using it for decades. It just always gives me shorthand. And so here we go. There's our 3 ticks right there. Boom. And again, that adds up. I'm doing it with single minis here. When it's this quiet, you can do it with 5 and have really nice winners. You just have to be prepared to take the risk. So just for fun, let's scale this a little bit and play right here. So how would I do that? Well, I'd probably sell 55, 57 and a half, maybe in the middle. Let's see if we can get one right here at 50. Yep, it's getting sold there and I'm not getting filled, so I'm going to chase it a bit. So, okay, we got a 54 and a half, weak bounce here. We're right on this inflection point. So if we can short into it a little higher up into this liquidity right here, we should be able to get a larger entry. You don't want to always do it right in the same spot. You want to give yourself a little room, but there we go. There's a 4-tick winner already right there. So I'll take those any day. I would have liked to have had 3-4 contracts on, so I could have traded that down to the last low with more size, but I just didn't get filled. You have to be very nimble about where you're looking to fill, and you have to reset your brain repeatedly. You can't just look at this and say, okay, I'm selling 55. Because yeah, I am selling 55. I even sold 54 and 3/4. But if it gets through here aggressively, the next spot in play is all the way up here at the next quarter number, 57 and a half, and then all the way up at 60. So if you got off sides here, even if it was just a stops run into this liquidity, you could end up pretty far off sides. And you have to bake that into your equation. The thing is that's really useful about this mid-session, that's rare. Nobody runs stops mid-session on high volume nodes because it's too hard to do. They'll run them further up, like up here, you'll see it when we're at the extreme of the liquidity. But in here, it's unlikely. So what we're doing in this session, and again, this is the makeup of yesterday's that we missed, I'm trying to transition from some of the theory that we talked about earlier, the wave volume, the market profile, the high volume nodes. And now what we're doing is we're transitioning into how do you execute against this stuff? And so that's what I'm doing. And I'm showing you examples. Next week, we're going to just do this relentlessly. We're going to do this for a couple hours a day at all different times of the day and night. And the beauty, again, of this approach is you can do that. You don't need any other tools. So let's cancel the ones in ES, and let's see if we can get some trades in NQ. The same story, looks pretty similar. Do I want to play short or long? Neither. It was a really nice long a minute ago. Look at all this selling. See, this would have been so easy to short into. Down on 8, up on 1, get short. Down on 5, up on 1, add to your short. Down on 2, weak bounce, boom. Now you get, so, you could have scaled into 3-4 contracts here and then rode that down. It was really clear that was happening. Is that what's happening over here on the right-hand side of my chart? No, that's not at all what's happening. We're in ebb and flow at the low end of the range, see over here, but having come off the lows substantially. So this is one of the places where there just isn't a trade, because flip a coin, which way is it going to go? I have no idea. The volume is balanced now, and it's not an inflection point. So where are we on the volume profile? Well, right below value. This is probably a short. Let's see what we can do. We're probably going to have to scale into it as high as 86, 85, but right now it looks like it wants to be a short. So let's see. So again, the place it really got sold was up here. See how much harder this is in NQ because of the movement, but you can also get much bigger moves and bigger winners. So these are micros. I'm going to scale in here. And then if we can start scaling out as it goes down and test the low again, I'll be in really good shape if it goes lower, which it looks like it wants to do, but I don't know. The NQ tick there is a little too strong. So let's see if we can scalp around this with some size. Okay, there we go. We just took profits on some of it. Now I've got a beautiful 9-lot protectable short. Look at that. So this is a couple $100 instantly. See what I mean? And that was really predictable. Boy, this is a beautiful trade. I'm short 72. It's trading 62. I've got 7. Let's take a few more off right here and try to write it down with a couple. I don't think it's going to go much lower because see the big high volume node right below us. You can see my take profit stops there. Bottom of values right here. That's as far as I would expect it to go, 50. That's as far as I would expect it to go on this thrust is 50, right to the top of the value area high. So let's try to protect that, but it's probably going to bounce a lot in the process like you're seeing. So now we got one left. Protecting that at 60, trying to get down to 50 here. Maybe we'll put a target down there, see which one it hits first. Oh, let's move out of the way. It's coming down really hard. It bounced, look at that, it bounced off 51 and I was at 50, so I didn't get filled and now I had to get taken out at 59, still profitably. But see how much I lost 8 points in there just by not grabbing that turn. So you can see it on the dome, but you can really see what's happening if you watch wave volume. Now look at that right there. This was the ebb and flow. We broke the low and those wicks are the buyers. So that was a little stops run on that low. It may go lower, but they turned right around and bought it. See? So if you dial in on this, look at the wicks down here. We've just got wick, 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 wick. This is an inflection point. It's a perfect inflection point. And so what I want you guys to do, if you have any of these tools on your platform, great. If you don't, that's fine. You know, you can do it with any of the platforms. But what I want you guys to do between now and next week, and as we're going through next week, is just watch this and see if you can get a sense of the rhythm. Again, in NQ, you want to focus on strong momentum. That's your friend in NQ. When it's doing this kind of fake out at a low stuff, you can still scalp it, but you're going to get caught. They're trying to push it out of this range, and so far unsuccessfully. On the other hand, ES, your inflection points will almost always be tradable because the tick value is so much higher. You can always scalp for 3 ticks and make money. And so remember to divide it up that way. If you're looking at really strong momentum and movement, you probably want to be playing an NQ and playing a little looser, you know, scaling a little further apart. And in ES, you can come in and play really aggressive volume on the inflection points because again, the odds that it's going to just totally break out of this range, absent some sort of news, are overwhelmingly low. So you want to take advantage of that. And so let's just watch and see if we can see some more examples. There aren't always trades, but there are trades pretty frequently when you use this method. Right now, I don't like this spot. We're right on 50, and it was a long, but it actually traded all the way down to 48 before it got bought. So I don't want to get caught in that. I still like this area up here short. So that's right on the top of this high volume node. But it could also go through there pretty fast. Look at the tick. Tick's getting strong. So let's see if we can get a short on right around here again with some size. Again, high volume nodes tend to be inflection points, and there's one right here. You can't miss it. And if you want, I can also put up a footprint here. We can see the liquidity, and you can also see the liquidity right here and the traded volume. But I've also left this so that I can put these up here. I liked that after the new jigsaw. That's one thing I liked is when I doubled up my fast footprints. I've got one running on the other screen too. But see on a 5-minute, you can pretty much see the same thing you're seeing on the dome. So go out to a little more structural view. I just switched that to 30 minutes, and now we can kind of see the structure. Okay, there's the overnight low. That's always a target. We have a price rejector on the pullback, and we're right in the middle of this big range here. So structurally, I don't see anything there telling me to play one way or the other. So let's stay with the wave volume and see if a fade up here works. Looks like it wants to go higher. The liquidity is higher up. So, you know, these are kind of the places you would play. So let's see what we can do. These are minis. So, you know, I'd never do that at the open or the close, but I'd do it at the close if it was quiet. But this is the kind of stuff I'll do all day long midday because the odds of it running me over are pretty low. It might, but ooh, this is getting sold right here. That's weird. It didn't even bounce all the way up. Now I got it. Okay, 53.5 short. And let's try to get some more size further up. And I've got a target at 52.5. I might end up taking, we have a 3 lot now. Let's take one at 53.75 for 2 ticks, one at 53.25 for 4 ticks. And so now we've got a nice $100 winner from 54 with 1 lot left. I could protect it and see if it pushes down. Maybe we can get down to 50, but probably not. I'm using a volume stop here. See that V20? It's another technique to learn. That's a volume stop. You set it by putting it in stop volume 20 and Jigsaw. You can do it in any platform. What that means is if it just trades there, normally a stop would trade automatically when the price trades. This won't do that. This will give me 20 contracts of leeway. So if it just touches and 20 contracts don't trade, my stop won't be implemented. It'll implement on 20 contracts at whatever price I'm at. Oh, we're catching a beautiful move down here. Look at this. This is $200 profit on this trade, and I took no risk. We were never off sides here. And, you know, it got right on the VWAP. This is probably where it's going to bounce, and there it goes. See? When you get to the point where you see this over and over again, it gets that readable. And I know for all of you, or many of you anyway, it's not that readable yet. Some of you have been around long enough, and it is. But it gets that readable by just practicing it. And if you practice it over and over again, you're going to be able to do it. Practice it in sim, practice it in micros, and you'll start to see these patterns. And once you see them, it's funny. This is an interesting anecdote. It's like up until the point you learn to see this stuff, you have to think about seeing it. Listen to this. This is important. So in other words, if I bring up this and I say, okay, where are they buying and selling? I got to think about it when I'm new. All right, it's getting sold up here, right? But once you get good at it, you say, all right, boy, I'm going to short up there, particularly if they get a little stops run up there because it's so aggressively getting sold. And down here, it's getting bought, but that's less interesting to me right now because this high is very clearly aggressive. So that's, again, the same area I've been scalping right up in here. So that's really worth watching. It gets that visual. And I was trying, this is really funny. I was trying to do this a week ago with somebody that's not in TRG and totally new. And I was just trying to explain this. And I couldn't stop seeing it. I was trying to show them what it looks like if you can't see the pattern. And the pattern just kept being really visual. And the person I was showing it to, who again knew nothing about this technique, was able to understand it immediately. And it was funny for me doing that because I had to unthink it. When you're watching it, it's just real easy to just react to it. And so here we go again. This might be a good opportunity. We're down right on the 50 spot. Could you buy it? Yeah, I like shorts better than longs here, but this will probably work. Whoops, I got one at 51.25. Let's try to add to that down in here where it was. I didn't get a good entry there, but again, could I get out of here with a couple of ticks? Probably, but I'm going to want to scale it because that held nicely. But the risk is all the way down to here at least. So you've got to be cognizant of that. A lot of times you'll see these sudden sharp moves at this time of the day that don't go anywhere. That's their attempt to push it out of the range so that they can buy and sell it, like down to this liquidity right here. So I'm having to, there we go. Now we got our second one. So let's see if we can get some aggression down here through 50. If not, we'll scalp out and take profits on the way. There it goes. See, we got another 50 bucks just like that. And, you know, you can always make money doing this for 3-4 ticks. You know, 4 ticks is 50 bucks. So if you have this set up at all on your platform, so just a 15-second wave volume, it doesn't need to have my indicator tools on it if it's in Sierra or whatever, but try practicing this. The only thing you need is the volume. The ticks are helpful too, so having both of those is helpful. But just watch it. Like right now, this ebb and flow has been really tradable and it hasn't gone more than 5 points. It's in a tight little range. I expect this range is actually going to break. It feels like it wants to break to the downside and maybe retest the value down here. So it's doing that right now. So let's see how far it gets before the buyers reassert. At the moment, they're reasserting right here. So I'm going to grab one long. But the real trade's probably down here. I'm already profitable, though. Look at that. So see what I mean? You know, it's funny. When I try to teach this midday session, it gets really repetitive because I just keep saying the same thing over and over again. So I'm going to I'm going to laugh at that because it's so consistent. But understand that one instrument's going to be different than another instrument. NQ has a very strong momentum flavor to it, like this. Whereas ES has a much more, let's go find nearby liquidity and play off the liquidity flavor to it. Particularly when the liquidity is pretty good. Look today, we've got pretty good thick liquidity, just a few ticks away from the inside bid and ask. That's better than it's been all through rollover week. And that's typical, again, from here on out. So repetition is absolutely the key, Chris. And this is why there's an Ides of Monday. I do this every day, most of the time for real money and most of the time fairly aggressively. And even if I trade Friday aggressively, like today, the fact that I'm not trading tomorrow and Sunday, I'll do the Sunday reopen myself sometimes, but I'm never aggressive at the reopen. So by the time Monday rolls around and we start getting the volume again, your brain is just detuned from that. And so you need to tune it back in. Ooh, we have a momentum move going in NQ. Let's see if we can play this. Weak tick right into here. It should be a short right here on the VWAP. Let's play it. See how that couldn't take out that, and look at the volume difference. So they're probably going to try to run some stops up here, but it's probably still a short. Let's see how far they can push it. We're in the 90s, so certainly zero is in play. So if you're not prepared to play this up to zero, then you can't, because NQ is going to move around that much, and it still is a short. It's going to bounce. That's the nature. But this is 1K versus 5K. So, the sellers are still in control, and here we go. We're taking profits. So it's literally that simple. This is the perfect example of in trading where you could really overthink something that's absurdly simple. So now I've got a 9 lot on. I'm hoping we get up to 0-0 here because I'll get really aggressive up there where the liquidity is. But down here, it's trading into high volume nodes right on liquidity, but it is bouncing. They're running stops here. Let's take a look at the footprint. We'll be able to see that really clearly there. So here's the footprint on 30 minutes. You can see we're right on the overnight low. And they're trying to push it up here, but they're pushing it up and selling it into it. You can see, look at all the volume on the sell side here. So let's see how far they can get it. This is always fun. See how the big sweeps down? I'm definitely in the right spot. So let's try to scale this and we want to be down here where we can protect it and get on the other side of our entry. But that might mean going all the way up to zero here. You can see the liquidity is parked up there. This is why I really like crunched NQ, and the new jigsaw just didn't work for me yet. So here we go. Look at that. Sweep right into the profit. That's what you want to see. You want to see it sweep into your targets. Boom, like that. Now we've got a really nice spot we can protect. We're short from 87. It's trading 82. I got one left. Let's keep that one and see if we can rescale this up here. Meanwhile, we could easily run down to here, and you can always see where your nearby spots are. If you were at the morning session, Lee was saying he likes to be trading to something. I don't do that. I want to trade where there's a good entry and I can protect my profit. And where it goes to, I'll just let it go as far as it can. And if it doesn't go very far, I'll take profits quick. If it gets going, I'll protect it and let it run. That's kind of a scalper speculator's mentality. And that's a little different than, trading structure like Lee does, where you're trading toward an artifact. I'm going to scale this a little bit more here and see if we can catch a little more of a push down as it scales. This is also the beauty of micros in NQ. You can really scale around a key idea effectively. Now it's going to zero, so let's let it go and see if we can really get thick up here. That will be the ideal trade. Meanwhile, we'll want to take some profits on the pullbacks. I have a 10 lot now. I'm going to scale it a little bit at a time. Now I have a 12, 13, 14. These are micros, so there we go. Now we just picked up another one on that push up. Let's see if we can trade these ones around zero. And it's probably going to flush down. Yeah, here it goes. This is what I call flush the toilet in NQ. After they get good and short at the high, they come ripping down. So now we've got a beautiful protectable short. Again, from 92, it's trading 82. I've got $200. This is how you do it. Again, I feel like a broken record when I teach this because it just seems so easy once you've done it for a while. But I get for you guys, it's going to take more practice. But that's all it is. It's just practice. So now we got one left. Let's protect the lost two. Now we got one, and boom, we're out. And there's another entry up here somewhere, maybe around zero. And again, if you pull this up, all we're doing is playing this little ebb and flow. And remember, price has 3 personalities in any instrument. It has ebb and flow. That's the normal tight range. Everybody everybody in the auction more or less agrees on value, and the bigger traders are just trying to push it to the extreme so they can fade it. That's all that's happening. High momentum looks like this. It's going one way on bigger volume than the other way by a lot. That's high momentum. And then ebb and flow and high momentum, two best things to trade. The one you can't trade is price discovery. That's like we see at the open, where it's really aggressively going both ways. And that's the market's way of finding value. It lets the more aggressive traders push the price. And often at inflection points, particularly at the open, there's aggressive traders on both sides of the tape. And that's why it sweeps both ways. And that's why one of the criteria on my discretionary sheet is, are we getting sweeps? Well, right now, have we seen any sweeps? I have not seen strong sweeps in either direction. We did have a nice sweep down. That was friendly because I was short. So that's what the word, when I say our sweep's friendly, that's what it means. If the sweep is friendly, it's going the direction you're trading. I was short, it swept down, that was perfect. But now it's not sweeping. It's just sitting on value again. Look at this. We're still trading between 50 and 55 in ES, which again, you could be trading both ends of that range all day unless that range changes. And that's always the criteria. When the range changes, start over. But as long as you have a well-defined range, play it. This couldn't be more well-defined than it is right now on ES. And NQ is similar, but it's just overshooting, see? And it pushed up enough to take the stops out, and then it traded down. That was that right there. See, here's the high. Look at that. It took out that high by a couple of ticks, and then this is what I call flush the toilet. But let's get everybody going up, and we'll get short, and then we'll just slam the bid with a bunch of size and stop all those guys out. And they're probably setting up to do that again. So always watch previous action. That's why having the line for the price is useful. You want to see where the previous inflection points were. So that's the scoop there. All right, I see time and forgive yourself when you do execute against it. Yeah, you got to learn to be wrong and be okay with being wrong. That's one of the things that you're not doing yet, David, is, and many people that are new, you know, a lot of people are perfectionists, and to be a good trader, you've got to be good at being wrong. You know, you say, okay, here's the setup I'm trading. Like over there, I'm buying the bottom and I'm selling the top. That's no longer valid if the top goes up by much. And like right now, we just are about to try to take out that 55 level. So the next level in play is 60. You don't want to play from 55 to 60 if you can help it. You want to play at 60. So this could be a stops run to the upside that I don't want to fade right now. Look at the volume. Let's watch it. Let's see. Okay, the equal volume, this spot right here is key, and we're right on it. I bet they're going to run stops to the upside. Let's see if we can get short higher up if they do that. And here it comes. Watch the tick, very strong tick. That should get it up here. There's 57. Okay, I'm short. See what I mean? That worked instantly. Good trades work right away. Somebody said that once. And then it's just a matter of managing the profit and the risk. So now we got $50. We got 5 ticks. Can I get 5? There's 5. 62.50. Let's try for 6 ticks on the next push down. I'll click on the 55 quarter as soon as it trades below. There we go. Now we've locked in the next level down. So now I'm on 6, 7 ticks. There we go. See, that's how you do it. This is technique based on a very orderly way of reading the market, which is just watching the aggression of the volume and how far it gets on aggression. That was 5K. It got 23 ticks and came right back in the range. What does that tell me? They ran stops. That's exactly what we just saw here. They ran the stops up to the next quarter number and then boom, pushed it right back down. So if you get used to this rhythm, and you get used to this rhythm by practicing, guys, like I said, it gets hard not to be able to see it. It's just so obvious. And if you're new, that's your objective, is to get it to the point where you can look at it and just immediately understand which way to play. And this is why I like wave volume so much. Now, if you combine that with the statistical view of the range, which is the LRC, look what's happening right here. We're coming up into this area that was heavily traded. So again, we are on an inflection point, but the LRCs are saying based on this data, we could get higher up, which guess what, would be right at the top of that range, which would be perfect. So this is the value of the LRC. It tells you the statistical gaming of the range, and then The wave volume tells you the statistical gaming using the aggression of the volume as to who's in charge, who's controlling the tape. And right now, ebb and flow, but they are running stops. So you can literally play both ways. I like this better as a long off the low than a short off the high because it has potential to go higher up. And the ES one, on the other hand, I like as a really aggressive short because this area that we sold off from so hard, we're really litigating that. It just cannot get above here. So this one I would be playing very aggressively short up there. And they don't always, they can be different because remember, you're playing the inflection point for ticks in ES and you're playing the movement for points in NQ or MNQ. So that's that's kind of the intersection of range, which is the LRC, and volume, which is the wave volume. So now it is possible, by the way, and let's see, Sachin here. Sachin has a really good combo of this. Where he's got his wave volume on his LRCs. And I've done that before, but I'm using the one in Jigsaw now, and the LRC in there isn't very good yet. It will be better in the next release. So I like to look at them separately because this plot for me is about the range. And this plot for me is about the aggression in the range. And so it is possible to look at them on one plot, though. Again, as I mentioned, Sachin has that running, and it looks really nice. I have the chart book he's using for it for a volume-based bar chart, and I will show you guys this next week. I'm not going to have time today, but I think it's a very interesting idea if you're in Sierra to do that. But again, I choose not to deliberately. Anyway, the other thing I also like to do, but one of the reasons I like to be able to switch my LRCs and my wave volume at different intervals. Like right now, my LRCs are on 30 seconds, not 15, and my wave volume's on 15. Now they're 15 and 15. I like to be able to do that separately, and if they're plotted on the same chart, I can't do it. So 30 seconds gives you a really good idea of the range and where older inflection points are, like earlier in the day. You'll see that really clearly on 30-second bars for LRCs. And but if you really want to trade the volume, 15 seconds is a better interval for that because you'll see these areas more clearly. If you go to 30 seconds here, what it does is it pushes all that together. And here I'll show you what I mean. And it makes it harder to read in the volume. So that's one of the reasons I'm running them separately. So here's what 30 seconds looks like, just so you guys can see it. See that to me is harder to read because these swings are tighter together and there's a lot more volume on them. So I can't discern what's really happening. It looks like a really tight range, but there's no way I could scalp this based on this because they're too far apart. But if I zoom into 15, all of a sudden it's scalpable because I can see where the turns are happening. And sometimes I even go faster than that. Sometimes I'll run these as fast as 5 seconds. In fact, here, let me show you what a 5-second looks like. If you're scalping a really, really aggressive momentum, 5 seconds is interesting because it shows you the places to re-enter the best. So I will sometimes tune these around like this. I don't know if I'm going to get 5-second data here with Zoom throttling me. There it is. Okay. So 5 seconds turns ebb and flow into scalpable. See what I mean? This is the ebb and flow, and you could literally just scalp these 3, 4, 5 points at a time, which is what I'm doing on the dome. But I'd rather see more time frame, like 15 seconds, to weight the volume because 5 is really fast. And again, in certain conditions, it's useful. But as a general guideline, I would use 15 there, and I would use 30 on really big ranges for your LRCs. And when the market's relatively range bound, then I would take the LRCs down to 15 seconds. I want to show you guys one other thing too. Yeah, but remember, I'm just reading Chris's comment. If you're gonna scalp ES for ticks, you generally want to be prepared to do it with some size. And you'll often, particularly at a ledge, you'll get a stops run that'll take you 6 or 7 ticks offside. But sometimes that's a perfect entry. Like this was an example of it up here. this push up would have been that would have taken you out of shorting here and been an ideal spot right on the 57 quarter number, 57 and a half quarter number to add to your short. So to learn how to trade it in ES, you're probably better off starting with blocks of micros and 5 micros at a time. That's a decent way to do it. So let me show you what that looks like here. Whoops, I didn't want to click on that. Hold on. Zoom is throttling me again. Okay, let's put this into micro land. And okay, so now we're running ES data, but I'm scalping micros. So my trades are going to be in micros here. And what we'll do is we'll make it 5. So these are 5 micros. So basically I got half a mini now. And this is a great way to practice scaling in and out around tight ranges without taking quite as much risk in ES. You know, it's basically half the risk of a mini. So here we go. Oh, shoot, we're right there again. This was a perfect spot to try scaling it right on that high volume node again. I missed it by a beat. I was grabbing a sip of coffee. So you can see it got sold right there. So again, this node is in play. So here's a way I might be able to play it back up to 55, but now it's going the other way. So you might want to just take 5 at the market and see if it pushes down. So either way here, we'll get to play this. Here we go. So but you got to be prepared to play all the way up to that number. Otherwise, you could get offside. So see, I've got nice little profit here for my micros. I could just come up and take it. Yeah, it's getting bought right here. So I can either protect there or just take it. So let's protect. Maybe we'll catch a move down here, maybe down to 50. There's liquidity right there and liquidity down here. Those are liquidity providers. Don't see them all the time in ES. Every now and then you do. I want to protect this, and I don't want to give it back. So it's probably going to hit me here and take me out. There it is. That's why it can be good practice to use little blocks of micros because you can still make money. Oh, here we go. We're coming up here again. You can still make money, but you have the ability to scale a little bit. This isn't a swarm trade. I'm just trying to trade around a high volume node, but they are going to run stops around it. You know that. So you have to be prepared to be able to scale it. If you can't scale it, you could end up offsides pretty badly. But even if you just break it down into blocks of 5 micros, that's scalable enough that it works. I'm not trading MES with any lower than that now. If I'm in the ES instrument, I'm either trading ES or 5 blocks of MES because it's just not, otherwise it doesn't pay to trade this instrument. I'm better off over in NQ because NQ, I can play one lot MNQs and make a lot of money because there's so much more movement. In fact, there's a trade over there right now too. Let's get short there. But again, that could be a lot better trade further up, although it's working right away. So that's good. Let's see if we can scale this one. The tick isn't going up, so I should be okay. Now it's starting to go up, but it's not high yet. Let's play a little more here and here. And we'll put a couple of targets under there. This is right. It's going to trade 0 here. It almost always does when it's this close in NQ. But I think it's a real good spot for a flush down scalp. We should see a flush the toilet here at some point. Let's see how far up it can go. I'm going to play both instruments, which is a little tricky because I got to watch them separately, but I'm going to do it just for your viewing pleasure. Okay, we need to scale this up here much harder and then up here much harder if that's going to work. Okay, here's the flush the toilet coming right now. Come on. Boom, flush the toilet. There it is. Let's take profits. We're taking profits over here. We're break even over here. Oh, beautiful, 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 beautiful. We're short 95. It's trading low 90s. Taking profits. We're taking profits over here. Oh, wow, this one's beautiful. I got 4 ticks here for $100. So let's take some more of that off. And this one, and there's protective stops on that one. Let's take some more profit over here. Take some more profit here. Scoot that up. Okay, we're flat NQ, made some nice money over there. We're trading profitably in our ES trade. Probably could scale this further up because it's coming down. Let's take profit then. But you can see if I reset this, let's watch the fresh traded volume here. It put in a wick. See that wick right there on the So that concerns me that it's probably going to probe up, but so I should have taken a little more profit here, and I'm doing it right now. So now I've got a 5 lot. Perfect. Okay, that I'll keep. I'll keep the 5 lot off 55, and maybe we can get a move down to the other quarter or down to the VWAP, and then we can maybe scale this going the other way if it gets up into this liquidity up here. So let's scoot that into the liquidity. Meanwhile, I've got a profitable trade that I've got a 3 ticks. I can even go off sides and still be profitable on the remainder of it. So this is a really good spot to play. Again, if you pop this open, you'll see what's happening. Ebb and flow here, stops run, buyers. So let's see what we can do. There it is. Okay, let's take a little more off. And should get flat here in a second. It should rotate down to me. Otherwise, we'll scale it more on the push up. And battle right here. You can see the battle going on. And it's ripe for another stops run. Look at the tick, 360. It's probably going to push up into me. I got to fill here, hopefully. That'll beautiful. That'll get me into my position with a better entry. Now we can scale a little more up here. Watch out, though. We could run stops pretty hard with this much of a tick. Here we go. We're at the next quarter number. There we are. And let's do that. And then the next place to play is all the way up here. So if got to be careful. You can get off sides on these stops run. This is a pretty good stops run, too. They get a lot of volume just taking out the previous highs. So again, usually these are very tradable, particularly midday. On quad witching, not as much. Midday is a little more volatile than in other middays. We'll do a lot of this next week also. I'm just going to show you a bunch of examples. So I'm going to scale this just a little bit. There's the liquidity right there. So we didn't quite get to the liquidity. So let's put some targets under here. Let's see, that's too many. So is that. Let's scoot that down. Okay, well, as soon as we get a rotation down, it's going to get interesting. We haven't had one yet, though. It might be about to start right now. Watch the wave volume. Even if we just come back to this hull average here at 57.25, I'm profitable. So that even if we just touch that, this is a nice spot. Good inflection point. You can always make money in inflection points going both ways. This might have been a decent long because the tick is still holding up, but not as strong as it was a minute ago. So here we go. There's a little bit of a flush. Watch the tick. That's always the best instantaneous what's going to happen next tool is the tick of the broader market. Okay, perfect. We got stops run and we got filled. Okay, now right at the edge of value. So I've got to either be aggressive or get out of the way here. I'm going to be aggressive because I think it's a good opportunity, but that doesn't mean I'm right. If I'm wrong, I'm going to get run over here. So let's scoot this out of the way for the moment. Good absorption here. See all the trading on the blue there. So we should be okay, but we're off sides by 2 points now, which is a little too much for ES. Let's look at the wave volume. What did it do? 11K, 37 ticks. Took out those really aggressively. Either that was a stops run or it's initiating buying and I'm off sides. We'll see which it is in a minute here. Top of value is worth watching right there. I've got a little more size here than I would want, but I actually am going to take a little more even. Pretty good strength here in the volume. Let's see if it gets anywhere. Look where NQ got to. Remember, we were at 0 a minute ago. We're almost at 20 now. That's always the next inflection point right there. You can see. This should trade back into the range, but the tick's still a little too strong. There it goes. It's coming down. Okay. We definitely want to take some of this off very fast because I have a lot of size now. So let's see if we can get a nice pullback. One thing it's also useful to look at here is where are we in SD land? And you can see we have not pushed that at all. I'll zoom in on this a little bit. Hold on. There we go. So that's the gap down there, and we're just in between the SD1. So this is not extreme at all in either direction. So that's one reason not to be as short as I am, to be honest with you. But let's see. There's 100 micros. We're profitable at 59. Excuse me. Yeah, at 59 now, and 55 is where this all started. So this could end up being a really nice trade back to this liquidity right here. See, it's all stacking up right below where I am. So I'm right on the sweet spot. The next sweet spot's all the way up here, though. So Easily the risk is to the top of the range, easily. There's no question about that. So again, you don't want to do stuff like this if you can't afford to get off sides, and you have to understand where you're wrong. And on this one, that's tough because this is the top of values. So this is actually where I'm the rightest. So, you got to really, really be prepared for that. Let's see if we can scale this just a little bit more. And then if it keeps going up, I'll just get out of the way, but I don't think it's going to. The tick is still pretty strong here. Let's see what the rest of the internals are doing. So you can see the advanced declines improving quite a bit, and the tick's going back and forth around 0. So this could be offsides. We'll see here in a minute. I don't think so, but I now have it. If it goes back just below 60, I'm profitable. I scaled a little more there, and that's probably what it's going to do now. So let's watch the wave volume. 60 is that where the whole average is. That's right there. And boom, here we go. We're about to get profitable. Let's take a lot of this off fast so that we don't get trapped up here. I don't want that. Good absorption. See, it's all blue here, but it's still up. So I'm still slightly off sides, a few ticks. And this is what I mean about you can kind of scale pretty aggressively mid-session as long as you're, prepared to get off sides. Here we go. We're taking profits. There's 100. There's 200. Remember, I got off sides almost 1,000. So I don't look at risk reward ratios. I just look at where am I likely to be right and make money. And that's what I'm doing here. So I got off sides more than I'm making. And for newer traders, they're like, isn't that wrong? No, most scalps will go off sides because they're scalps. That's just what happens. You will have MAE that's bigger than your profit if you're a scalper. Good scalpers can make money on being MAE of 10 and then just getting a couple of ticks. So it's a question of getting good at it. And I'm going to buy some more of these back here, just so we improve our average. And then you can see now we're well into the profit. So I can just kind of start scaling out of it. Okay, there's 4 shorts still. Let's keep those. Switch this to 1, just protect it. But see, that got pretty far offside, and this is the profit that's left. So we still managed to get out of it with a decent amount of profit. All right, that's about to flatten out, and it did. So let's see. The challenge is, time and forgive yourself. Yes, absolutely. The challenge is seeing the 5-0 is getting run over and you need to short. Yeah, exactly. And that's why having the ability to scale can be helpful, as long as you just don't get into the stupid trader mindset of, well, if I scale far enough, I can make any trade work. You can't do that. I'm experienced enough that I can see if that's at all likely. And sometimes you'll see me scaling really aggressively off sides. And it most of the time ends up working, but sometimes it doesn't. And when it doesn't, I take a decent loss, but I'm used to that and it doesn't bother me. So, make sure you can develop the right mindset. This is a weird spot now because we took out the overnight low. So here's the overnight low in NQ. We did the same thing in EF. So now it's kind of unsure what it wants to do next. See, this was the overnight low. We just got above it with a little price rejector on the pullback, but that was a stops run that I faded. So I don't have a lot of confidence in staying long, but the short went farther, against me than I thought it would. So what does that tell you? Well, maybe take a break. And we're right on 1 hour, so we're going to start wrapping up. I wanted to get this piece done that I missed yesterday because I really wanted you guys to see how in the middle of the day, it's just completely different. It's just really clear where to play. And if you patiently wait for those spots, and right now it's unclear because we moved out of that range, we're forming a new one. So now you want to give this range a little time to play out. It could be a great short. It looks like it. But if they can run stops and the tick stays strong, which it isn't right now, then it could go, certainly to the high of the session, which is right up there. And by the way, we just retested the 15-minute break to the downside, which was right here. In fact, let's bring up the 1 minute and look at that. So you can see that here. This was the 15-minute break to the downside, which today I wasn't in session because of, my platform crashed. That was a perfect short. Look at that wick right there. It kept teasing through it, and then they just flushed it. And then it formed the initial balance, which it took out. Now we're on the other side of the initial balance. We're back above the VWAP and we're back above the 15 low. So, this is kind of no man's land up here. We're right where we opened, and we traded off. We got to a decent extreme down here, and now we're back at value. So this is always going to be a hard spot to trade just because of that. All right. Thank you, Chris. I'm glad you got to see it. We're going to see a lot more of this next week. I just wanted you guys to have enough framework and theory to understand what we're looking at, because next week we're just going to look at dozens of examples of this, all different times of the day. It looks different during the night because there's so little volume, but you can still see where to play. You just have to be really patient. And that's easy to do in the middle of the night, because just give yourself something else to do. Like I'll get up, I'll crash at 5 o'clock, and I'll sleep for 4 hours, get up, 9, 10, have a cup of coffee. And then 11, midnight, we start the midnight oil trade. I'll trade for a couple hours and go back to bed. And just watch the volume. Watch for the extremes of the volume and watch the ranges, and be mindful of any European news or European earnings or anything else that can impact it. So we will see lots of those next week, and we will see more of these next week. But I'm glad we got this part done today, again, in the makeup from yesterday, because really important that you guys have this piece of framework theory-wise burned in, so that when we practice against it, you can see just example after example. Just realigning my charts here. I had everything moved around when I went to Jigsaw 5. By the way, I talked briefly to the tech people at Jigsaw. Everybody platform froze at the open. This was the first open where they had any sort of volume. It crashed everyone. So they're working on it. I would not install the new Jigsaw yet if I were you guys. This is the old one. I reverted. And so anyway, okay, are there any other questions or comments for today? I'm really happy with where we're at. I hope you guys are too. This was a really good chunk of material for first week. We're perfectly positioned to just practice and look at lots of different times of day and conditions next week, which is what we'll do. I will post the schedule, but I'm going to do it fairly around when the sessions are coming, because I kind of have to watch conditions. So I will post the session for the next day at least. There may be multiple sessions each day. So for example, Sunday night, I'll post Monday and maybe a Tuesday session for this class. But keep your eye on the announcements and alerts column in our stream, in the Chart to Dome stream, because that is where I will post. And it might be, oh wow, conditions are great, guys. Let's do a session. So you'll see that in the alerts in here, and so pay attention to that. And we'll try to do some more. Okay, thanks, Billy. I appreciate the feedback, you guys. Good question. How often do I trade the midnight oil, Chris? With my health. One of the reasons I started doing it was because I never sleep well. I have lots of chronic pain from all my motorcycle racing and shit. So a lot of times I won't be able to sleep because I'm hurting. I'll just say fuck it and get up, pardon my French, and have a cup of coffee and I'll trade. So a lot of times, I just do it because I don't feel well, and I've done really well with that. And other times, like if there's going to be European central bank announcements or talking heads or something, a lot of times I'll get up for it in the middle of the night so I can see what's going on. I'd say I probably do it a couple times a week at the most, and a couple times a month at the least. That would be the short answer. Okay, any other questions or comments? Otherwise, guys, have a great weekend. I will get next week's postings up. We always have the Ides of Monday at 6 a.m. for TRG. That's the next TRG session. So I'll post that link actually right now. Cool. All right. Thanks, Chris. I appreciate the feedback, guys. I always do. It's hard I can't see you, so I don't know if you're listening, sleeping, liking it, hating it. So the feedback's always helpful. Thank you for giving it to me. All right. Let's get out of here. I'll see you guys Monday. Have a good weekend.